discuss few more subsidiary books. Read on cash book, a simple column cash, a simple cash book. Just at the heading cash book. So, as our normal practice goes, we are going to write down first of all a problem, and then we'll learn how to prepare the cash book with that problem. Write down. These were the transactions. These were the transactions. These were the transactions of a trader. These were the transactions of a trader. Record them in the cash book. And prepare necessary ledger accounts. And prepare necessary ledger accounts. And prepare necessary ledger accounts. Write down. Transaction number 1. Cash introduced as capital. Cash introduced as capital, 1 lakh rupees. Reintroduced cash as capital into the business, 1 lakh rupees. Next. Goods purchased for cash. Goods purchased for cash. ₹20,000. Electricity bill paid in cash, ₹4,000. Electricity bill paid in cash, ₹4,000. Telephone bill. Telephone bill paid in cash, ₹2,000. Wages of workers, paid in cash, ₹30,000. Transportation expenses. Transportation expenses paid in cash, ₹5,000. Transportation expenses paid in cash, ₹5,000. Stationery. Stationery purchased for cash, ₹2,000. Stationery purchased for cash, ₹2,000. Next. Goods sold for cash. Goods sold for cash, ₹90,000. Goods sold for cash, ₹90,000. Next. Interest received in cash. Interest received in cash, We assume that we have given a loan to a borrower, and when we have given a loan, the borrower has to pay us some regular interest. So we are assuming we are receiving the interest in cash, 6,000 rupees. Interest received in cash, 6,000 rupees. Next. Rent received in cash. Rent received in cash, 8,000 rupees. We assume the trader has a building which he has given on rent to a tenant, and the tenant has paid him rent in cash, 8,000 rupees. Next. Commission received by the trader. Commission received by the trader in cash, 6,000 rupees. Next transaction. Goods purchased on credit. Goods purchased on credit, 4,000 rupees. Next. Goods sold on credit. Goods sold on credit, 10,000 rupees. Goods sold on credit, 10,000 rupees. Next, cash deposited into bank. Cash deposited into bank. Cash deposited into bank. Cash deposited into bank, 10,000 rupees. Now, if you observe the transactions, these are mostly cash transactions. So how to record them in the cash book? That is what we are going to learn now. Okay. The cash book is a very simple book. The format is also very simple. It looks like a ledger account. Cash book. This is a simple cash book. Receipts, rupees, payments, rupees. This is the format of the cash book. You can have date column, you can have LF number column also. You will have date number column here, then you will have LF number column here, ledger folio number here, date, LF number here. Okay. So let us start. Please open. Half a page is sufficient. Half a page is sufficient. Cash book. Receipts, rupees, payments, rupees. Wait. If you want, you can put debit and credit also here. Left side is the debit side, right side is the credit side. Let us start. What is the first transaction? Cash introduced as capital. How much? 1 lakh rupees. Now the accountant who is preparing the cash book, he has to do one very simple thing. He has to classify each cash transaction into a receipt or a payment. So now think from the point of view of the accountant. Cash is coming into the business. Who is giving the cash? Owner is giving the cash. Is it a receipt or a payment? Receipt. Receipt. So he has to record it on the receipt side. How much he has got? 1 lakh. The business has received 1 lakh rupees from the owner. So right here, to capital. We did not use any journal entry because it is a receipt. We have recorded on the receipt side. From whom the money came? From the owner. That is why I have written capital. I think you all know whenever the owner contributes money, goods, assets, if we place expense of the business, we will credit capital account. Whenever the owner draws money from the business, we debit the drawings account. Yes? All of you please record. Next transaction. Over. Recording is over. You need not worry about it now. You need not even think about an entry. Next. Goods purchased for cash. What is the entry you pass? Purchase account, return to cash account. No need to pass any entry. Classify it as either a receipt or a payment. It's a payment, so record it on the payment side. Buy purchases. How much? 20,000. Now listen to me. In cash book, we have written to capital. In capital ledger account, we should write it on the credit side, no? So immediately open capital ledger account. Right here, buy cash. How much? 1 lakh. If you want, you can think about the entry. What is the entry in our mind? Cash account, letter to capital. Capital account should be credited by cash. You have written by cash there. Next. Here you wrote buy purchases. What is the entry for goods purchased for cash? Purchases account, letter to cash. Cash account we have written buy purchases. Immediately you have to open purchase account and write to cash. I think you all know when we prepare ledger accounts, one ledger account is debited, the other ledger account is credited. If in the cash account we are crediting purchases, purchase account should be debited. Okay. Do I need to again prepare cash account? No. Why? Even if you prepare a cash account, you think about journal entries and you start preparing the ledger accounts, you will find that ultimately cash account will be like duplicate of the cash book only. Cash book and cash account play one and the same role. So we need not prepare again a cash account when cash book is maintained. Okay, let us think about the same entries once again. When cash introduced as capital, what is the entry we pass? Cash account, letter to capital account. So entry in my mind is cash account, letter to capital. If I open, I'll open here, cash account. What should I write? To capital. How much? 1 lakh. There also I am writing to capital. Without using journal entry, I prepared the cash book. But even if I write a journal entry and prepare a cash account, I get the same posting. Goods purchased for cash. What is the entry? Purchase account, letter to cash. Purchase account we should write to cash. We have written. Cash account we should write buy purchases. Again same. So even if you write journal entries and prepare cash account, you will find that cash book and cash account are same, duplicate. Hence we don't prepare a cash account when cash book is maintained. Okay. Next transaction. Electricity bill paid in cash. Now accountant need not even think about the journal entry. He has to only classify it as either a cash receipt or a cash payment. What is it? Cash payment. So you have recorded on the payment side. How much? 4,000. What should he write here? Buy electricity bill or buy electricity expenses. Buy electricity expenses 4,000. Now what should I do immediately? Open electricity expenses account, give a debit. Electricity expenses account. What should I write here? To cash. Check with the journal entry. What is journal entry we pass? Electricity expenses account, letter to cash. Posting of that entry is electricity expenses to cash. We have currently written cash account by electricity expenses. So the entry has been properly recorded and posted. Next transaction. Telephone bill paid in cash. Now just classify it as either a receipt or a payment. Payment. What will you write here? By telephone expenses. How much? 2000. What should you do? Immediately open telephone expenses account. I should write here to cash. So what we should do? All these accounts we should open and write to cash. Whatever accounts appear on the receipt side, you have to open those accounts. If those accounts are already open, go to those accounts and write by cash. That is what you have to do. Give credit in cash book, give debit in the expense account. If you debit the cash book, credit the income account. Okay, next. Wages of the workers paid in cash. Again, classified as a receipt or a payment. Payment. So I will write here by wages. How much? 30,000. Now what should I do? Immediately, no need of thinking about even a journal entry. Open wages account and write here to cash. Next. Transportation expenses paid in cash. How much? 5,000. What is the entry? No need to write an entry also. Just classify it. Receipt or payment itself. Payment. So write here by transportation expenses. How much? 5,000. Open transportation expenses account to cash. 5,000. Next. Stationery purchase for cash. It's again a payment. Buy stationery. How much? Stationery to cash. 2,000. Goods sold for cash. Cash account debtor to sales account. So don't need to even think about the entry. It's a receipt to sales. How much? 90,000. Now what should I do in sales account? I have to give a credit by cash. If one account is debited, the other account should be credited. Next. Interest received in cash. Classify it as a receipt or a payment. It's a receipt. So you have to record it on the receipt side. So I will write here to interest. How much? 6,000. What should you do now? Immediately open interest account and write by cash. 6,000. What is the next transaction? Rent received in cash. Again, it's a receipt. So you have to record it on the receipt side. To rent. How much? 8,000. So we'll open rent account and write by cash. How much? 8,000. Next, commission received in cash. Receipt again. to commission. How much?
6,000.
How much? 6,000. Next. Goods purchased on credit. Is it a cash transaction?
No.
Where will it be recorded? Where will it be recorded? It's not going to be recorded in the cash book. It will be recorded in the purchase book. Yes. We are not going to record it in the cash book. Next. Goods sold on credit. Are you going to record it in the cash book? No, we are not going to record it in the cash book. We are going to record it in the sales book. Okay. Next. Cash deposited into bank. Is it a cash payment or a receipt? It's an outflow of cash. Cash is going out of the business. So it is a payment. So right here, by bank. Money is going to bank? No. How much?
10,000.
Cash book preparation is very, very simple. And this is also a simple cash book, no? Now, how to balance the cash book? Cash book is also a ledger. It is equivalent to cash ledger account. When you maintain a cash book, you need not maintain any cash ledger account. And when you prepare trial balance, you need the cash account balance, no? That cash account balance can be found out from the cash book. Okay? When you prepare trial balance, we need cash balance. It's not going to come out from cash ledger account. We'll take it from the cash book. Okay? So, let us balance the cash book. Tell me which side is higher? In cash book, listen to me, in cash book, only the receipt side can be higher than the payment side, or receipt side will be equal to payment side, but payment side can never be more than the receipt side. Payment side can never be more than the receipt side. Receipt side can be greater than the payment side or equal to the payment side, but payment side can never be greater than the receipt side. Without having cash in your pocket, can you make payment to somebody? If you can make payment, then that means you are doing some black magic. You can create cash in your pocket with black magic. Hence, it's not possible. Unless you have some cash, you cannot make a cash payment. That is why payment side can be equal to or less than the receipt side. So tell me the total of the receipt side. 2 lakh 10,000. Write the same total on the payment side also, 2 lakh 10,000. And tell me 2 lakh 10,000 minus these items. What is the balance left? 2 lakh 10,000 minus these items. 1 lakh 37,000. Right here by balance carried down. Right here to balance brought down. 1 lakh 37,000. What is this? This is the difference between the total of the receipts minus the total of the payments. Temporarily we write the difference on the lower side, then we bring it to the higher side. What is the meaning of this? If I remove from the higher side all the amounts on the lower side, this will be left on the higher side. Balance means, balance is difference between the higher side and the lower side shown on the higher side. Okay. Meaning of this is, this side is higher than this side by 1,37,000. Okay. Now we'll also learn about a simple bank book. If I maintain only bank information in a book, that is called as a bank book. Write down. Write down. These were the bank transactions of a trader. These were the bank transactions of a trader for the month of August 2014. Record them in the bank book. Write down. Transaction number 1. Capital introduced by the owner through check. Capital introduced by the owner through check. Capital introduced by the owner through check. 1 lakh rupees. 1 lakh rupees. Write down. Next transaction. Goods purchased for check. Goods purchased for check. 20,000 rupees. Goods purchased for check. 20,000 rupees. Electricity expenses paid in check. Electricity expenses paid in check. 4,000 rupees. Telephone expenses paid in check. 2,000 rupees. Telephone expenses paid in check. 2,000 rupees. Wages paid in check. 30,000 rupees. Wages paid in check. 30,000 rupees. Transportation expenses. Transportation expenses paid in check. 5,000 rupees. Transportation expenses paid in check. 5,000 rupees. Stationery paid in check. 2,000 rupees. Stationery paid in check. 2,000 rupees. Goods sold for check. Goods sold for check. 90,000 rupees. Goods sold for check. 90,000 rupees. Interest received by check. 6,000 rupees. Interest received by check. 6,000 rupees. Rent received by check. 8,000 rupees. Rent received by check. 8,000 rupees. Commission received by check. Commission received by check. 6,000 rupees. commission received by check 6,000 rupees. Commission received by check 6,000 rupees. Next, goods purchased on credit 4,000. Goods purchased on credit 4,000. Next, goods sold on credit 10,000. Goods sold on credit 10,000. Cash deposited into bank. Cash deposited into bank 10,000. Now we have to record these transactions in the bank book. So I'll show you now how to record it in the bank book. Format of the bank book is very simple. Bank book, deposits, rupees, withdrawals, rupees. Is equal to a bank ledger account. We will also have date column and LF number column apart from particulars and amount. When do we fill up the LF number column? On the date when the entry is posted in the ledger, we will identify the page in which the entry is posted in the ledger and then write that number in the LF number column in the journal. Okay. Format will be like this. Date column. You will have one more column here. LF number column, ledger folio number, date, LF number. Let us start. So what you have to do is whenever a transaction happens with the bank, you have to only classify it into deposit or withdrawal. Deposit means when money is deposited in the bank. When you deposit checks, so money will be deposited in the bank. When the bank receives money on our behalf, we call it as a deposit. Or we go and deposit money in the bank, it is a deposit. Withdrawal, when you are taking out money from the bank. When you issue a check, bank will make the payment of your check. You can make payment either through cash or you can just write a check and give it to your supplier. The supplier will go to your bank and your bank will make the payment. So withdrawals will be recorded on the right side, deposits will be recorded on the left side. Let's start first transaction. Capital introduced by the owner through check. How much? 1 lakh. Now the owner is introducing capital into the business. Instead of giving cash, what is he giving? He is writing a check and is giving it to the business. Accountant of the business, what will do? Will deposit the check in the bank account of the business. So now money will be deposited or withdrawn from the business bank account. Money will be deposited in the business bank account. Hence you have to record it on the deposit side. How much? 1 lakh. So what should I write here? To capital. To capital. immediately open capital ledger account. Now if bank account is debited, what should we do with capital account? We have to give a credit. If you have a doubt, think about the entry. Bank account debtor to capital. In bank account we should write to capital. That is what we have written. In capital account we should write by bank. So write here by bank. 1 lakh. Next, be quick. Goods purchased for check. So we are purchasing goods and we are issuing a check to our supplier immediately. We are not even taking time. With one hand we are purchasing goods, with the other hand we are giving a check to the supplier. So now, is it a deposit in our bank account or a withdrawal from our bank account? Withdrawal from the bank account. When we issue a check, the supplier will take the check, present the check in my bank, and the bank is going to make the payment. So money will be withdrawn, reduced from our bank balance. How much? 20,000. You should write here by purchases. What should you do now? Immediately open purchase account and write on the debit side to bank. Check whether the posting is correct or not. When I purchase goods through check, I pass an entry purchase account debtor to bank account. Purchase account I should write to bank, that is what I have written. Bank account I should write by purchases. I have correctly posted in both the books. Okay. Next. Electricity expenses paid in check. So again, is it a receipt or a withdrawal? It's a withdrawal. So write here by electricity expenses. How much? 4,000. Open electricity expenses account. Debit, credit. I'll write to bank. How much? 4,000. Now look at the board, everyone. If purchase account is contained in page number 9 of the ledger, and if this is contained in page number 11 of the ledger, then once we have done posting, we write here page number 9, page number 11. Okay. Next. Telephone expenses paid in check. What is entry? Telephone expenses account debtor to bank account. So, no need to pass an entry, just classify that as a receipt or a withdrawal. It's a withdrawal. So, write here by telephone expenses. How much? 2,000. Telephone expenses to bank. 2,000. Telephone expenses to bank 2,000. Next transaction, quick. Wages paid in check. Again, is it a receipt or a withdrawal? It's a withdrawal. So we have recorded on the withdrawal side by wages. How much? 30,000. We should immediately open wages account. Right here to bank 30,000. Next, transportation expenses paid in check. So again it's a withdrawal, no? By transportation expenses. How much? Immediately open transportation expenses account, right here to bank 5,000. After that, stationery paid in check by how much? 2,000. Stationery account to bank. How much? 2,000. Next,
Goods sold for
what is the next transaction? Goods sold for check. Now when you sell goods, you receive a check. Check is deposited in the bank account. The money will get transferred from the account of the customer and will get deposited in our bank account. So our bank is going to receive money. So it's a deposit in our bank account. Go to the deposit side to sales. How much?
90,000.
Sales account by bank. Sales account by bank. Next,
Interest received by check.
interest received by check. Interest received by check. It's a receipt. So deposit. How much?
6,000.
To interest. We are receiving interest through check, no? Immediately open interest account. Right, by bank 2,000.
6,000.
To 6,000. Next, rent received by check. Rent received by check. It's again a deposit to rent. How much?
8,000.
Next,
Commission received by check.
commission received by check. So again, it's a receipt. Deposit to commission.
6,000.
How much?
6,000.
Next,
Goods purchased on credit.
goods purchased on credit. Will you record it in the bank book? We are going to go to the purchase book, write the name of the supplier in the purchase book. That's it. It's not going to be recorded in the bank book. Next transaction.
Goods sold on credit.
Goods sold on credit. Tell me, where will you record it? You have to record it in the sales book. We are not going to record it in the bank book. Next transaction.
Cash deposited into bank.
Cash deposited into bank. For cash, it was a payment. But for bank, it is a deposit. So you have to record it on the deposit side. How much?
10,000.
What was deposited into bank? Cash. To cash. If you want to open cash account and write here by Now can you balance the bank book? Total of the debit side?
2,20,000.
2,20,000.
1,57,000.
What is the balance left?
1,57,000.
1,57,000. By balance carried down. The higher side is more than the lower side by 1,57,000. bring it to the higher side. 1,57,000 to balance brought down. Now, listen to me carefully. When in the bank book, if the deposit side is more than the withdrawal side, the balance is called as favorable balance. What's called as?
Favorable balance.
When the deposit side is more than the withdrawal side, we call it as favorable balance. That means our money is there in the bank. Whenever we want, we can withdraw. But if withdrawal side is more than the deposit side, then it is called as overdraft balance. What's called as?
Overdrawn balance.
Overdrawn. You have drawn more than what we have deposited. Bank becomes a creditor to the business. But to get overdraft facility, you have to enter into an agreement with the bank. You have to give them necessary securities. When you give them necessary securities, even if you have zero balance in your account, and if you issue a check, bank will definitely honor the check. The bank will pay money on the check. Even though you don't have any balance in the account, you can withdraw some more money from the bank, which is like a loan given by the bank to the business. In such case, withdrawals can exceed the deposits. Then we'll say the account has been overdrawn, or we'll say it is called as overdraft balance. In the case, now in this problem, what is it, favorable or overdraft? Favorable. But if withdrawal side is more than the receipt side, then it is called as overdraft balance. Is it clear? So this is how you prepare the cash book. When you prepare only cash column, and if you prepare only bank book without any cash and discount column, this is how you prepare the books. Okay. So now we'll learn triple column cash book. What is triple column cash book? When we are going to maintain
Three columns.
cash information, bank information, and also discount information also in the same book. That book is called as the triple column cash book. Okay. So let us start. Now what you'll do is, before we start solving a problem, I'll show you the format. Okay.